Colin Fisher joins me now from StableView Asset Management. Colin, what's new in technology?
You know, it's interesting. The number of companies I've said, here, buy this company, it's a great company, and then it gets fucking sold to somebody.
Right.
For pennies on the dollar, and the Canadian marketplace sits back. We fund our companies in the most egregiously bad ways. The way funding works in the Canadian public market right now is, so below 50 million is dust desert dry. Below 150 million, there may be a few drops of water. Below 250 million, maybe you get intermittent rainfall from time to time and you have something growing. But in general, we've created an ecosystem where there's no competition for capital. Down in the States, what you get is there's a good company and they go after that company. But in Canada, we don't know, we don't understand these things. So we're like,
So what do you think is the fundamental deficiency in the Canadian market that causes this reality?
Well, I think it's like anything. Why do you not, like, okay, so in all markets where it's a complicated buy, it's education. We have generalists writ large in Canada, and we don't have specialists. And we particularly don't have specialists in the technology space. And what you find is that these are not easy acquisitions, you know, like or understanding of the company, because you can have the exact same technology, and you go to market strategy is different for one. So there's a company, a private company, that's doing some very interesting thing in the paper flow of deals and papering of deals and getting investors in and all this stuff.
Dealmaker?
Yeah.
Yeah, Dealmaker is what the Bullet ID is on.
Right. So there's a bunch. So interesting company. I like the company, but they're not actually that unique. There's other software, but some people are going proprietary on it. So you can look. There's about 2 or 3 investment banks that have invested their own platform for themselves.
Recreating the wheel that already exists in DocuSign.
Well,
with some extra features.
But yeah, but you have to be very, like, so for me, this is where the simplicity falls apart, right? So you have Visa and Plaid, for example, right? So Visa buys Plaid. Visa is a payment system extraordinaire. Why are they buying that? They're buying it for a specific problem that they're solving, which is in part, they've created the train, the train tracks, and it's not the payment processing. Anyone can do that. It's the ancillary elements that they've already tied into all of these different elements, and they've got that, and they can go out and make that snapping. And I think part of the reason they pay more for it, going back to the competition of capital, they're like, if I don't buy it, somebody else buys it, and it puts me at a deficiency. And whereas with VersaPay just is getting bought, and I think so. Great Hill Partners bought it. They got a steal, in my opinion.
Private equity group?
Private equity out of Boston. But
VersaPay has been around for a long time. It's a very mature platform, isn't it?
No, dude.
I thought VersaPay has been around since like 2012.
Yeah, but what it was before versus what it is now are 2 wholly different things.
Oh, okay. I haven't followed it since
Halle Berry at 6 years old versus Halle Berry at 32 is not the same transaction.
Sure.
Right?
Right.
So they used to do payment processing and all this stuff when it was probably, I'd say, only around the last 4 years when Craig O'Neill starts. That's the new generation. They build real software for accounts receivable automation. And that's the B2B payments. And the reason, and now that if you look inside the actual deeper area of technology and in the private equity space, that's actually one of the areas that's heating up the most. Plaid is sort of a part of that. Like the Visas, the MasterCards, they're trying to get the next level of people going over their rails, right? So VersaPay, if you go into a bunch of different areas, IDC put them up at the top 3 companies in the world for accounts receivable automation, for payment processing automation. So there's the payment processing, which is really sort of granular, nebby little stuff. But it's all the ancillary activities that get you onto that rail for the payment. And personally, you and I don't crack open a checkbook, but Corporately, people crack open checkbooks all day, all the time. I know we had this conversation, you're a bit more of a modern company, but for the vast majority, checks exist. And the B2B payment space is still very much paper-based. And even if it isn't, even if you're using automation, the elements of where people go, they get an accounts receivable, gets payment into the bank account, then reconciling it with the accounts receivable software is a whole, like actually getting that whole flow to be automated, where you don't actually have to have humans go in and it's doing the reports. That whole process is sort of the next level. VersaPay just got taken from us. Canadian built, we had great management. You know, StableView's been involved with that company for years.
The conservative nature of Canada's capital markets class prevents them from having an original leadership role.
Yes, that I agree with. But the capital in Canada takes risk. We had the weed trade, we have oil, gas mining, junior exploration, all that stuff. That is the Wild West. That is hard stuff. We have risk capital. We just don't know about it as well. I mean, if you look at fracking is a technological element. Like, that was a brand new change. Like, Goldcore was an open source. They took something from technology and they did an open source and they said, tell us what you see.
Yeah.
And we'll fund it. And if you do, then we're going to give you a slug of it.
Right.
But we have the risk. From a regulatory framework, though, we've busted the system. Try and price a private. You have to get into a Kama Sutra pose and write 3 more pages of the Kama Sutra to try and explain it to somebody. Then you have the problem of a lot of them are like, we don't go below 50 million bucks. We don't go below 150. Like, they'll have their own internal rate. Then they have a liquidity provision. So there's these problems that are drying up, in particular in the private, on the public side, writ large. So we've basically created this thing that says, do not invest in Canadian tech. You are a bad human if you invest in Canadian tech. And so the Americans are like, all right, dummies, thank you very much, thank you very much. We build great. The number of times I hear people going, oh, we don't have the skill set or the knowledge. And I just want to dive across the table and choke them out.
Well, I would say that in the capital space that we lack leadership and visionary leadership.
Well, that's why I'm putting together Garrison Creek.
Okay, well, that's great.
So what I'm putting together is
an early stage investor?
I hate the terms.
Okay.
So let me tell you what needs to be true typically with what we're doing. I think there's a big slice of venture capital, but there's this desert past sort of the next stage. So maybe we can get stuff out of the ground. We have reasonable angels. We have reasonable venture, but then there's this desert of capital. So I've assembled 4 CEOs who have all built multi-billion-dollar companies multiple times. That's number one. The executional...
As your advisory board on this fund?
It's not an advisory. It's a board of directors.
Okay.
And it's not a fund, it's a corporation.
I see.
And there's 2 fundamental reasons for that. Because everyone says, remember, funds have a problem. You cannot invest over 20% if you're a fund. You cannot own more than 20% of a company. So I'm not a fund. This is not a fund, this is a corporation.
An investment enterprise, though?
Capital corporation.
Will it be a registered entity with the regulators?
Not from that perspective, but if we go public, it'll be regulated as much as a public entity is.
I see.
But it's a corporation. It's in the business of investing capital and taking active roles, i.e. we want to be above 20%. We want to go on boards. We want to provide guidance to management. You are precluded from being active with your companies if you're a fund. You have to be below 20%. You can't do certain things. God kill you if you actually try and help your companies in Canada as a fund manager, because there's this delineation. And there's no ability for the regulator to understand, are you doing harm or are you doing help?
Right.
So the only way to actually help companies is to be a corporation and take an active role. And people constantly say, we don't have the skill set. Well, I've got assembled 4 guys who've all built multi-billion-dollar companies. Well, let's assemble our own talent and put our capital to work in these companies. We're a capitalist society. However, we've regulated ourselves out of where buying another bank stock doesn't build Canada. Buying stock in a company that puts on jobs, builds, grows, innovates. Canada's been innovating for centuries. But at some point, we've said, don't do anything that will potentially cut your fingers. So we want to give the capitalist element of Canada, who are the surgeons. There's a lot of really smart people, but we preclude them from doing stuff. So now they're just constantly playing the game. So I'm coming to the conclusion that the game that should be played, and the one I play well in, is helping build, nurture, and find the talent in Canada. We need a Pied Piper in the Canadian tech space. Many of these endeavors have been capital guys trying to talk to other capital guys. I'm not that smart. Those guys can go and play their ARBs and their this and their that, and they can play the game of the stock market. I'm the guy who's going to carry the water and have been smart enough and understand maybe just enough technology for these guys to actually have conversations with me and go, let's solve this problem.
Thanks very much for joining us. We'll have you back soon. How can people find out more about the Garrison Fund?
Call me at, go to stableview.ca and call me.
All right.
Or email us.